What is going on, investors? Hopefully, you guys are doing well out there. BLNK Charging reported their Q3 earnings, and I wanted to get on a video and talk about it. The stock is reacting positively in the after hours of 5.75%. We got a $1.48 billion market cap on this one, which actually make it towards the smaller end of the companies that we look at here on the channel. And boy, this evaluation just doesn't seem as egregious as a Plug Power, which we just reviewed as well. Now, we do have Plug Power like short interest. In fact, even more, 36% short interest on this one. I tell you what, you get any positive move on this stock and it can be incredibly volatile because of this short interest. Now, that is shown here in the 52-week range. This stock has been as low as $9.35 and as high as $64.50. That is a big, gigantic range on this stock. And what we want to talk about too on today's video is the technical pattern we're kind of setting up with BLNK Charging. We're basically in the middle of our 52-week range. We'll talk about what direction we might think this stock might potentially go here in the coming days. Now, I'm not going to talk broadly about charging your electric vehicle, the tailwinds that are in this industry. I figure most of you watching this video will configure that stuff out yourself. What we're going to focus on are these Q3 numbers, and do they match up with a $1.48 billion valuation? Now, when you have that type of valuation, and we're going to assume, and I think accurately assume, that a company like BLNK Charging is not making money. In fact, they're probably bleeding money pretty badly, and they're probably in fundraising mode, but that's absolutely understandable given where this company is in their history, also given their market as well. There's just simply not that many non-Teslas EVs out there on the roads, so the need for BLNK Charging not necessarily high, but if we're looking 5, 10, 15 years down the road, can this company become a gold medal winning charging stock? Which I think is probably the future of vehicles, okay? Not that gas stations will completely go away, but as somebody that has driven many, many miles in a Tesla, these EV charging stations are actually, I think, going to be a very, very good business in the future for some company, and maybe it could potentially be BLNK Charging. Now, their revenues in the most recent quarter came in at $6.4 million. The growth rate checks a big old box, okay? 611% year-over-year growth rate on that revenue. In fact, they beat by $1.68 million. You gotta love that, okay? And we also had over 3,000 charging stations contracted or sold just in Q3 2021. That was an increase of 351%. So I love that as well, okay? This company's basically their bread and butter is building out the network, very similar to Tesla's strategy, okay? Tesla wanted to build out the supercharger network to give their automobiles that competitive advantage versus others. And I think Tesla has executed on that strategy. And if you look at their stock price, it certainly has rewarded them. Whereas a BLNK is a little bit different strategy. They don't necessarily have vehicles to sell, but they certainly could partner with other vehicle makers out there if that's something that they wanted to do. Now, in terms of the revenues over at BLNK Charging, we've got a 3 months ended here. Obviously, we talked about our total revenues here. Last year, they were $906,000. Yeah, $906,000. I'll be honest with you, I run a business with more revenues than that. So it's interesting to see a public company do that. Maybe I can send mine public one day. I'm totally joking because look, nobody, myself included, very few companies, I should say, especially in the public markets, are growing their revenues like this. Look, we went from 906,000 up to the $6.4 million worth of revenue. And we also increased the number of charging stations in the most recent quarter by 351%. And I would expect that. I mean, this business just has a big, gigantic, like hurricane tailwind behind it. So I would actually expect these revenues to continue. Now, in terms of product sales, I look at these revenues, I see 6.4 million. The biggest, I mean, we're talking about the biggest one is here at 4.8 million worth of revenue. And we come down here to cost of those product sales coming in at 3.6 million. So what I see with this company is they are profitable from a gross margin perspective on their number one business. And so that's what I like with, you could call these maybe like a startup or maybe early stage company is probably a better way to say it. They are profitable from a gross margin perspective on that top line business. I like to see that. The other thing that I see is their second highest fees are this 908 million, and the cost of those was only 200 million. So I like that as well. I'm seeing solid growth rate here. The rest of these are a mix, I think, of lost leaders. So they lose money money on some of this stuff down here to drive these revenues up here that are higher margins. That's a strategy I'm totally comfortable with. So we take our total revenues here at 6.4 million, we minus 5.5, and look, we cleared $892,000, okay? And so look, these are small numbers, but when we factor in for the 9 months, we pulled down $1.4 million worth of gross profit over the last 9 months off of $12.9 million worth of business. These aren't tech-like margins, okay? But these are somewhat decent margins, and I do like the fact that they are profitable from a gross margin perspective. We just did a video on Plug Power. They have negative gross margins. So this company does check a box there. On top of that, a $1.48 billion valuation on $1.4 million worth of gross profit in 9 months. If you want to annualize this out, they're well over $2 million in terms of gross profit. Well, it's not, I mean, look, this company's probably not undervalued, especially when you look at the short interest on this one. Okay, smart money's looking at these same numbers that we are and kind of predicting a different outcome. But look, it's not that bad, okay? The valuation's not egregious. Now, unfortunately, though, we've got some other expenses here. I like how they list it out as compensation, and then they've got general and administrative expenses. They also have other operating expenses here as well. And as you'd expect, those have gone up across the board. In fact, we basically 4x'd our total expenses. We went from 4.2 million up to 16.7. So you see how far this company is away from being profitable from an operating perspective. So what I talked about was gross profit, okay? But after we factor in all these other expenses, we come down to basically our operating profit, and now we're talking about a $15.8 million loss. And so this is what the short sellers are seeing, is that this company is miles. I mean, we're talking about you're going to have to charge your EV 3 or 4 times before it runs out of range, before this company is even profitable, okay? We're going to have to grow these revenues 600% year over year for 2 or 3 years, because my guess, these expenses are not going to flatten out anytime soon. We're seeing a gigantic leap over the last 9 months. We went from 11 million in expenses up to 37. We lost $9.9 million last year on a 9-month basis, and now we just lost $35 million. And so from that sense, the company obviously seems overvalued from a valuation perspective. Now, let's take a look at the balance sheet, because whenever a company is losing this much money, and we'll come to cash flows in a second here as well. In fact, let's just zoom down to cash flows and see how much of this is actual cash flowing out of the business, or if it's maybe partly stock-based compensation and things of that nature. So we pull down this net loss, 9 months ended here. Left-hand column is our most recent quarter. So we pull down this $36 million worth of losses over the last year. We get to add back in some things like depreciation. We get to add back in different types of stock-based compensation, including options. We'll talk about that here in a second as well. And then we get net cash used in our operating activities, and we see it's increased threefold. Okay, we lost $10 million, and this is in a negative way. We lost $10 million last year on a cash flow basis. Now we're burning through $30 million. So they're on about a, last year, they were on $10 million burn rate for 9 months. Now you're doing a $10 million in burn every 3 months. And so for every quarter, they're doing what they did in 9 months last year. This company, obviously, to take a lead, to take a leadership position in the EV charging race, they're having to go fast, and they're going to have to push the envelope on these types of losses. And so I am comfortable with them losing this type of money, because they are investing a fair amount of it back into the business. They are able to raise money. We see here proceeds from sales of common stock. Last year, they made $17.8 million. This year, tons more, $221 million in terms of fundraising over at BLNK charging. Now, from a balance sheet perspective, they still have a fair amount of cash on the balance sheet, about 180 million, about 200 million if you count all their current assets. So the company has a fair amount of money, but again, we're expecting these losses to just continue to mount. The other thing that we're absolutely expecting over this company is, look over the last year on a 9-month basis, you had 28 40.9 million shares outstanding last year. Now you got 41 million shares outstanding. That's the other thing that the short interest on this stock is taking into account. They know that the tailwind is behind this business. They know this company is going to be putting up electric growth rate types numbers, but they know at the same time the fact that this company is just burning money like a traditional combustion engine burns oil and gas. Well, this company is burning through cash. Okay. Again, $30 million. They're basically on a $10 million run rate on that cash burn. I would expect that to continue. So you'd expect next year somewhere in the range of a 40, maybe 50, maybe even a $60 million cash burn for the full year. That would basically deplete about a half or nearly third of your cash over at Blink Charging. Those are just some things that you need to think about if you want to invest in this company. Now, the other thing that I think you need to understand when you invest in these really volatile stocks, like I talked about earlier this year, the stock was, way down here at $19 per share, and it's been as high as $64 per share. Okay. So with these stocks that really swing around, I think you need to understand them from a technical perspective. Now, what I've noticed is we've really gone sideways. Now, what I do also notice, and it's not necessarily that concerning, is we made a high here, a lower high, a slightly lower high, and it looks like if we fail this area right at about 38, 39, maybe even as high as 40, even as high as $42 per share, well, we've created another higher low, and we're potentially going down on this one, and you could potentially get it at a lower price. So from what I see is sideways consolidation with Blink. We've tested this area up at about $44 per share twice over the last few months, and we've gotten rejected. In fact, gotten rejected all the way down to about $26 per share. We are working our way back up to this $42 per share. Right now, the stock is sitting at about $37.20. If I want to go bullish on this one, I'm looking for a break above this $44 per share range. I don't necessarily want to buy into resistance above me. I would rather buy with resistance below me, because then I could set a stop loss maybe down here. Okay. Now, the other thing that could potentially happen is we come back up to 44 and we do exactly like we've done the last two times. And you could even count this as a time as well, when we got above here and we got rejected all the way back down to 25, went back up to 43, got rejected. Same thing could happen. The stock could retrace down to this $24, $25 level, and we could buy down here with support below us. Now, if we break the really bearish scenario, maybe a competitor comes online, maybe this company has trouble scaling up. Okay, it could be that we break this $26 level, and then it's look out below. Okay, it's like, diving from like one of those Olympic diving boards. You'll just literally be falling through the air and then cutting through the water once you hit it. The stock could go all the way back down to $11, $12 per share. Quite frankly, okay, that is what's potentially on that downside. Okay, and the upside, if you break through 44, you start retesting these all-time highs up here at $60 per share. Look, if this company can continue with the wind behind its back in this EV space, and I absolutely buy that this company absolutely has that capability, they can keep growing these revenues. If you can manage to buy this stock on the dip below this $1.5 billion valuation, this is a stock I think you could toss into some kind of speculative portfolio. Now, do I want you to have this a major portion of your portfolio? Absolutely not. You should be fully invested in all the FANG names, all the names that are near the top of the S&P 500. You should be diversified into dividend-paying stocks, financials, banks, anything like that. And then if you have a little bit of money left over, you could toss a couple of bucks into a stock like this, because look, you don't necessarily need that big of a move to have a reward on this. And I tell you what, if a stock like Blink is going up, your Nvidia stock, your Tesla stock, your Apple stock, your Amazon stock, those are going to be going up as well. So you don't have to go overweight these speculative stocks. I just think this one doesn't have an egregious valuation, and you do have upside if they are able to convince the market that they are a viable company. Well, this short interest is going to get out of this stock. And how do you get out of a stock that you are short? Well, guess what? You got to buy it, and that would send stock higher on that type of momentum. That was Blink Charging. Hopefully you guys enjoyed this video. I'll be back again soon with more. Good luck with your investments.